All right, folks, I hate to say I told you so, but boy, oh boy, I've been telling you so. Now, today's briefing is coming a little earlier, but because I wanted to show you something really important. Now, I've been pointing you into the NASDAQ 100 over the last few weeks, telling anybody who would listen to me that the percentage of stocks trading above the 50-day moving average is at 90th percentile. And I showed you a chart. I went as far back as 20 years and showed you that anytime we go above this level, which happened one time a decade ago, the market turns south. Now let's go back to a daily time frame. Look at what happened in the last few hours. The market turned south. Now, the question now becomes, how far will this go down? Well, here's something to take into account. Let's take a look at the QQQ. This is the NASDAQ 100. Now, what we just did was we were looking at the momentum levels internally without taking market capitalization into account. Now we're looking at the actual chart that takes market capitalization into account. And as you could see here, the overbought levels that we have here, we are above, typically RSI, anything above 70 is grossly overbought. The RSI levels right now are at 85. So what does that mean? Well, let me put a study on here real quick for you. This means we're really, really overbought. Like, let's say the rubber band is stretched out here. We're like this right now. But here's the thing. The rubber band is contracting now, and it looks like it's contracting slowly. And that should take us to the 50-day moving average, and that will relieve a lot of the pressure and will put this RSI level back to neutral. So here's the thing. It doesn't take a lot. It doesn't take a lot. So just because you're hearing me say markets are overbought, the rubber band stretched out, it doesn't mean that the market's going to crash. It just means that the market is overextended, stretched out, and needs to cool off before moving ahead. And I do believe the market's going to move ahead because economic data is just absolutely phenomenal. GDP is humming along above 2%. Unemployment, employment's at a 60-year high. I mean, the numbers are phenomenal. And if China and U.S. continue with phase 2 and phase 3 of the trade war, things should get better. So I'm expecting a pullback to the 50-day moving average, just maybe 5-10% cool off in the NASDAQ stocks. It'll relieve a lot of the pressure, and I mean a lot of the pressure. It'll cause the percentage of stocks trading above, in the NASDAQ, trading above the 50-day moving average to cool off to right around the 60th percentile, and the market will not be, or the tech market will not be as stretched out and overbought as it is right now. Now, we had some real estate data. Real estate is slowing down. There's no question about that. As a matter of fact, according to Realtor, next year we're expecting a little bit of a cool-off period, first time in a while. This is the trend since October. Last few months we've been going south, and I'm expecting the real estate sector to come down. I believe this uptrend we saw here is going to cool off, and I think real estate is going to cause blue chips to cool off a little bit the first quarter of next year. Don't expect real estate to make a big swing next year. Expect the first quarter to be soft, and possibly we'll see a pickup as we get towards the middle or end of 2020. But first quarter of 2020, expect real estate market to cool off. Expect this high to stay in place. Notice that the overall stock market has been going higher. We've made new highs, but real estate has been going straight down for several months now. As a matter of fact, since October, we've let me show you here. Let me show you my drawing skills. Look at that, straight down for for a few months now. So don't expect real estate to make a big move. I'm going to be shorting this market according to several expectations, and I'm going to be giving you a lot of expectations tomorrow when we do the live broadcast. You don't want to miss out. Follow the link below to register for it. But what I do want to tell you is that next year, the sectors you buy and sell is going to make the biggest difference. As I was saying just the other day, if you were in technology, the second half of 2019, you would be up 20% without options. With options, probably 250, 260%. If you were in the real estate sector, you would have made less than 2%. Over 20%, 2%, just by picking the right sector. So 2020, we're going to see more volatility, and we're going to have to focus more on the right versus wrong sector. We're not going to get a broad market rally like we did in 2019. But the good news is every expert is expecting downside correction, and that means we're not going to have a downside correction. The biggest downside corrections occur when everyone's expecting more upside. Everybody's scared. Just like last year. Remember, end of last year, everybody was expecting a recession. Same thing this year. Everyone's expecting a recession. And that's not when we get a recession. We don't get recessions when interest rates are near historic lows, unemployment's at a 60-year low, and GDP's humming along. So the markets are strong, but expect more volatility and expect fragments, some fragments to be fragmented and some not. We got to be in the right sector. The overriding concern in 2020 is to buy the right sector and sell the right sector. It's not going to be a broad market rally. Small caps are going to be moving higher. Real estate's going to be moving lower. We're going to have to be very nimble in how we trade, and we're going to have to pay special close attention to the various sectors in 2020. Folks, as you know, and this is important, New Year's, it's less than 2 days away. And my resolution this year is a real simple one. I'm going to double my entire portfolio. That's right, I'm going to double my entire portfolio. I'm going to do it by following a comprehensive trading blueprint that I just put the finishing touches on. And on Tuesday, December 31st, I'm going live to reveal all the details about it. I'm not holding anything back. Now, if you want to make doubling your portfolio part of your 2020 plans, click the link below. Learn all about it. It'll register you for Tuesday's event, where I'll reveal my game plan for doubling my portfolio over the next 12 months. That's right, 1 year. Click the button now, and I'll send you to my private training room. Tuesday morning, we begin. Don't miss out. Follow the link below. It'll take you to my trading room. We begin Tuesday morning. I'll see you there. Don't miss out.